Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is the founder of Adrian Day Asset Management, the man himself, Adrian Day. Welcome back, sir. Thanks for joining us.
Well, thank you, Ivan. Thank you for having me.
Yeah, it's always a huge pleasure having you on. We haven't had you on for a while, but I really wanted to bring you on to talk to you about what's happening in the economy. There's so much uncertainty, especially around banks, commercial real estate. What is your opinions right now, focusly right on commercial real estate? People are saying that there's going to be a collapse coming there soon.
Yeah, sure. Because you've seen this with a lot of banks, not just U.S. banks, but foreign banks as well. But primarily, say German banks, Japanese banks, that have a lot of investments in commercial real estate in the U.S. And their standards for write-offs are a little stricter than in the U.S. And
Hmm.
so you're seeing a lot of foreign banks, particularly the two countries I mentioned, but others as well, who are writing off and taking impairments on their US commercial real estate. The US banks seem to be wanting and able to sort of just defer and push down the road, but that
Right.
doesn't make the problem go away, of course. So yeah, I think we've got a major, I'm not alone in this, of course, we've got a major problem in commercial real estate in the US, and it's coming to a head.
And absolutely. And the Fed can't really people are always saying, they could just reduce rates, but at the same time, if inflation continues to stay hot or continues to go up, and it's underreported, a lot of people do believe that the actual inflation numbers are a lot higher than what they report in the news.
No, really?
Yeah, of course. So if you look at that, Adrian, and you say, okay, if inflation numbers are higher, they can't reduce rates, but they're just trying to, play that game, the Fed and the commercial real estate. I've heard also, Adrian, a lot of these banks, these major banks have billions of dollars invested in this commercial real estate, and they're all in unrealized losses. They haven't actually declared them yet because, but if they do, you'll see bank collapse like crazy. So what do you see?
Sure. And not just banks, of course, but insurance companies as well. Same
Oh,
thing. The insurance companies that are insuring the banks for the losses, or insuring the commercial real estate developer owners, landlords, they're going to have a problem as well. Yeah, you're absolutely right. I mean, the Fed. There's always a dilemma, right? There's always, if we do this, there's a risk. If we do that,
right.
that's a risk. But right now, the Fed really has a huge dilemma. As you say, if they lower rates, then the inflation numbers are only going to pick up. I think they're going to remain stubborn and move up. I'm not talking about accelerate, or I'm not talking about runaway inflation, but they're going to move up anyway.
Right.
But if they lower rates, that only exacerbates that problem. And that's really, I guess, that's really the only downside for the Fed. I'm not talking about, fundamental effect on the strength of the economy, but that's really the downside for the Fed at the moment to lowering rates. But
Right.
on the other side, the downside to keeping rates where they are for any period of time is not only a recession and higher unemployment, but as you say, is commercial real estate and
Right.
then banks and potentially the insurance or some insurance companies, which are heavily exposed to CRE, and then the other downside, of course, is the federal government's debt levels, which even if you keep rates where they are, that means a huge increase in the amount of the percent of money in the federal budget that is going simply to interest payments.
Right.
So if we keep rates where they are for a while, that's going to increase by, I don't have the numbers in front of me, sorry, but that's going to increase by at least 50% over the next 12 months, just if we keep rates where they are.
Wow.
So I think on balance, the Fed knows that they have to ease. And there's different things they can do, with bank reserve requirements and with, there's different things they can do, but it means overall they have to ease. And that's bad for inflation.
So I just wanted to let everyone know about our new sponsor, Strategic Wealth Preservation. They are an international precious metals dealer and they are a secured storage provider. that have headquarters in the Cayman Islands. The company owns and operates a large Class 3 UL rated vault in the Grand Caymans, and they offer other strategic locations as part of its global storage network. They specialize in the acquisition, secure storage, and liquidation of precious metals for individuals, companies, trusts, and wealth management professionals on behalf of their clients. So if you guys want to check them out, the link is in the description below. And how do you see this all of playing into precious metals for gold, silver? Do you like a lot of people have been saying, oh, the second you reduce the rates, then you're going to see silver and gold skyrocket. But they're still holding strong. Like gold has been holding strong for a very long time. It's very resilient. So what do you see there in the precious
Yeah,
metals?
no, and we've talked about this before, but yeah, gold itself is holding very, very strong, but silver is not, gold
Right.
stocks are not, silver stocks are not. And we know the reason for that. The reason for that is one thing and one thing only, and that is when you look at who has been buying gold assets in the last 18 months, and it's been central banks. And
Wow.
central banks want to buy gold bullion. They don't really want to buy silver bullion, and they definitely don't want to buy Newmont Mining or Ajax Exploration. They want to buy physical gold. And that's why gold is doing so well, even in the face of the gold market,
Right.
otherwise being very, very weak. I mean, you look at ETFs, for example, over the last 18 months, we have had steady outflows from global gold ETFs. I don't mean every single week or even every single month, but on balance for the last 18 months, we've seen money flow out. And this year, up until February 15th, latest data, this year, been 42 tons outflows of gold ETFs. That's more than all of last year's outflows. So those outflows are continuing. So I think it's important people realize that's why gold is holding up in the face of everything else, gold coins, gold ETFs, silver stocks, everything else going down.
Why do you think the gold ETFs and everything is there's so much going out of it and it's low? Like why? What's the reason?
You know, I might get some hate mail on this. I hope not. I think that it's gold. Everybody talks about the disconnect between gold and gold stocks.
Right.
I think it's gold that is too high for the current economic environment. Now that's changing. But if you look, say, 3 months ago, you had interest rates moving up dramatically, not just in the US, but in other countries around the world, in Europe, even in Japan, they're moving interest rates up, for goodness sake. If they keep
Right.
on at this rate, they might get to zero pretty soon. But so interest rates moving up and a strong dollar. Well, that economic environment is very negative for gold. In addition to that, so I would argue that the disconnect between gold and gold stocks is not the gold stocks are too cheap, but the gold is too expensive for the economic environment. Now, that's the economic environment is changing. So that's good news. But when you ask why have gold stocks been so weak, I think that's part of a reason. And the other part of a reason, frankly, is that the broad market is doing so well. People often say to me, oh, gold's doing well, the stock market's doing well, why aren't gold stocks up? And there's a false premise there. Gold stocks will typically do well. I think gold stocks will do well when the rest of the market stumbles, not when it crashes,
Right,
because
because
when it
there's
crashes,
an
everything goes
because now
down.
there's like an AI rush. You see so many people invest billions and billions into AI stocks or
Yeah,
anything to do with
your
AI.
your normal generalist investor or your family office or whatever, they're having all the fun they could possibly have with Nvidia and Apple and
Yeah,
um, looking for AI. They're not looking at gold stocks. They're not looking at oil stocks either. But when the leaders start to drop, I think people will start to look at, well, what's undervalued? What do we look for now?
yeah,
And gold stocks are clearly one of the most undervalued sectors
absolutely.
there is. So I think the premise is wrong. If the market starts to falter would be a better word.
Yeah.
If the market starts to falter, that's when I think we'll see some interest return to gold. But getting back to your original thing about the Fed, I mean, history tells us that when the Fed starts to cut after a raising cycle, gold moves up. And that's happened every time. There's no reason to think it won't happen again
Right.
this time. So that's what we're really looking for.
Absolutely. And there's so much uncertainty with wars going on. You see the wars, you never know. Maybe it can go another 6, 7 years in Ukraine with Russia, and that will play a huge role on inflation globally, stock markets, and then you see what's happening in the Middle East. What's your ideas there for like the stock market compared to geopolitical issues like war? Do you think it's just temporary? Like if a war breaks out, it'll only temporarily affect gold and silver, or
Yeah, typically geopolitical events, typically they have only a short-lived impact on the price of gold. When something happens, there's normally a spike. And
right?
frankly, you often see gold moving up if it's something that's predictable, like the Russia's invasion of Ukraine was reason. I mean, I got it wrong. I didn't think they would invade, but I mean, it wasn't something that came completely out of the blue.
Yeah, you
Right?
knew that they
Massive
for
trips
about
at the
you knew
borders.
that for like
And
weeks.
right. And so gold was moving up ahead of that. Within 3 months, it was back to where it was before that. And that
Interesting.
before the whole thing started, the crisis started. And that is not an untypical pattern. Notice how Brits speaking with double negatives. That's not an untypical pattern. You know, even 9/11, that was completely unexpected, had only a short-lived impact on the price of gold. Typically, if gold's already in a strong up move and you have a geopolitical event, that's it, if you like, icing on the cake, and it can be a
Right.
much bigger move. Like with the Iran hostage situation in 1979-80, gold was already flying.
Right.
But ever since then, geopolitical events have been a very minor impact, to be honest. They have a bigger impact on other commodities, but where the supply might be directly affected by
Right.
what's going on. So phosphate with Ukraine and Russia, that's
Absolutely.
a prime example. Oil, one might have thought oil would have gone up more with what's happening in the Middle East right now, particularly in the Gulf.
Yeah.
Because that could hurt supplies significantly. The fact that it hasn't suggests to me that there's probably a little more supply than we thought there was.
Right.
But as for gold and silver, it tends to be a short-lived impact.
Absolutely. Well, Adrian, it's such a huge pleasure having you come down to Wall Street Silver as always. Where can people connect with you? And yeah, where can they see you?
But I don't want to leave on that note that it's
Okay.
short-lived. I want to end on the note that whether it's 3 months or 6 months, we are extremely close to that point where the Fed will have to cut rates
Yeah.
before inflation is completely under control or killed, and that will be extraordinarily positive for gold and silver. Where can people get me? It's adrianday.com.
Awesome. Well, again, such a huge pleasure, Adrian, and love to have you back in the future.
Love to, and thank you very much for having me.
Awesome. Talk to you soon.
Okay.